Well, let's keep in mind, this is October after all, and October is a scary month. Look, it's a scary month. It's known for Halloween, but it's also known for major market sell-offs. And I got to tell you, this year for Halloween, I was hoping to dress up as a trade deal with China. But I can't because I've never actually seen a trade deal with China, and I may not see one between now and Halloween. But what investors have seen before is Q4 volatility. And they saw it last year. It's a scary monster that came out. No one wants to talk about it, but we know it's out there. If we don't make a trade deal, that's a real concern. And we're seeing investor sentiment at its weakest levels since mid-2016. Manufacturing PMIs, a little bit soft. We're seeing all this softness, and we're telling investors, don't trade the trade headlines and compete with algos and robos. Instead, fade the market leadership on the trade headlines and instead build a shopping list for year-end, opportunistically looking for tax loss selling candidates, which I'm much more excited about in election season. I don't think there was a misunderstanding. China was very quick to pop our celebration bubble over the weekend, and they were unfazed by phase one of the trade deal. They made it very clear where they stood. That's a formidable ally in negotiations. You know, it's like fighting Ronda Rousey in an alley fight. And it's not going to be an easy win. And I think that tone is something that investors should take away and recognize and spend some time focusing on.
So, Larry, then, is the bar too high to hurdle in terms of getting this phase one deal on paper over the coming weeks? And if so, does that mean a pullback for stocks?
Look, there's a bunker-like mentality starting to emerge for many investors here. We see record inflows going into money markets where investors are chasing yield. We see this barbell approach where investors are trying to hide from the stock market in young IPOs, private deals, and the IPO market is effectively dead right now for those deals. So I think investors are actually right to have that bunker-like mentality, but now they're starting to chase utilities, they're starting to chase gold, they're starting to chase all the usual suspects to hide from the market. That's actually what creates the opportunity at year-end. They're leaving everything else behind. They're leaving all these other areas they're afraid of. If we do make a deal, it's going to be a massive positive catalyst for the market, and the market will be relieved. The problem is it's not going to have an impact on the earnings season right now, and that's what we're most focused on over the next few weeks. Earnings are going to be a little bit soft, and nothing on the trade calendar is going to really affect that. And that's, I think, what we really need to be focused on. Fundamentals where the rubber hits the road, not sentiment, which is what investors are focused on. The domestic policy risks are going to be targeted on the largest players in the industry. It's going to be the Facebooks. It's not necessarily going to be the smaller technology names. The failed IPOs are they're not a political target. They're not a populist target. The companies that do business with China are going to get unfairly beaten up with tax loss selling. And some of those are technology names. So it's no longer this definition of labeling growth versus value. It's going to be opportunities versus overvaluation. Anything that is large, it's going to be well represented in the major market indexes, and it's going to have a political target. Investors should fade and be much more cautious. But there's plenty of other opportunities. If we get a soft landing, lots of smaller companies in this country will do very well, particularly if trade issues are ultimately addressed. And the economy, we're not acting like it's a 50-year low in unemployment and all-time highs in the market. Investors are acting much more cautious. And I think that's what gives us hope going into year-end. You just have to rearrange your portfolio and not chase what everyone's been chasing. That's where the risks are, particularly in an election cycle where the political landscape is so volatile right now.